Good morning, everyone, and Happy New Year. Hope everybody had a great 2021 trading year. I know my day today, at least, is going to be busy doing videos. I have 7 videos to do. This is my 3rd one. This will be the quarter end, quarter 4 end review. And from what it looked like, I had some pretty good, had pretty good results on this one. So we'll take a look at them. And we'll see. And I just want to warn you that some of these charts may look pretty sloppy because I have the 4th quarter levels plotted, and some of them are also going to be on the next week or next month or next quarter or next year. So I also have levels plotted for that. So we'll try to sift through that if we see it, and I'll try to walk you through it and try to make it as least confusing as I can. If you haven't watched, take a look at the weekly watch list review and the December watch list review. I've just posted those. In fact, the December watch list review is still processing, so it's not quite ready yet, but by the time you see this video, it will be. So for the quarter, we had some inside quarter setups. We're looking for Disney to the downside, CVS to the upside, Home Depot either direction, UPS to the downside, and John Deere to the downside. So let's take a look and see what we had. So let's start with Disney. Go to the quarterly, and you see here we were looking for a break below. Yeah, see, I think this is one of those charts that has multiple, possibly multiple months on it, multiple levels. So we're looking for a break below this candle here, which was our entry would have been below 169.03, which was below this candle. And you look and see we hit. Let's see. The low was 142.04. We actually would have hit the first 4 targets and almost the 5th target. The 5th target was 141.70. Target 5 right here, 141.70. So we would have almost got to that target, but we did get to the 4th target, which was 146.29. And you see that kind of coincides with this 9 SMA, real close to it. We poked down below it and then we popped back up. But there's a lot of support or resistance depending on which side of it you're on. I call this a cloud, and don't confuse it with Ichimoku cloud. That's not what this is. This is a 9 EMA or 9 SMA and 21 SMA, and this is the cloud that's in between them. That area in between usually offers support or resistance. So if we look at this on the shorter time frame, look at it on the weekly. We have to go back to October 1st. So what's the date here? October, right here, would have been the start of the new quarter. So we triggered here, kind of fluttered around that level, didn't really break it with confidence. Kind of goes along with what I said before about the SMA. Our trigger was at 169.03. The SMA is at 177. That's an $8 cushion between your trigger and your SMA. Look what happens here. When it comes up, it gets up to the SMA, and now it's ready for its break. Now it triggers that, and boom, there you go. I'm not going to tell you, I'm not going to sit here and lie to you and tell you I trade it that way every time. I'm not going to tell you I wait every time until here. But most times when it doesn't work here, it will work once it hits that SMA. So, but again, took it out, hit every target. Let's see if we can go back on the daily. If we can go, yeah, we can go back that far in the daily. So we're looking for October 1st. Okay, so we didn't break below it till here. Didn't close below it until actually we gapped below it. That was our first close below it. This here, the close was 169.07, and the target or the trigger was 169.03. So we never actually closed below it till here, which gap down below it. So may have been a tough one to trade. It might not have worked. Again, that's why I looked at smaller time frames. If you look at this time frame, you either would have entered here and stopped out, or you would have waited for some confirmation, like a close below that line, in which case it would have gapped down below first target, so it's not an entry anyway. So if you look at the shorter time frames, you get much different result than if you look at the longer time frame. So that's why I do that. So Disney, as far as I'm concerned, would have been either stop out or no trade. CVS, we're looking for a break to the upside. Right here, looks like on the monthly chart, looks like it was a home run. Let's take a look at shorter time frame. Go down to the daily and go back here. We broke the trigger right here, and we never really looked back. I mean, you wouldn't have hit target 2, most likely, because it depends. If you put your stop here, let's just say you put your stop here. If you put your stop here and you left it here and didn't touch it, yeah, you would have made it to target 2 and then some. Myself, once I hit target 1, I would have moved my stop to break even, and I would have been able to stay in it. But I'm sure when I got to about this level, usually I kind of look at the midway point between these two targets. Once it hits this level, I would have moved my stop to here, and I would have got stopped out here. So it depends. If I'm trading a longer time frame like this, I should probably clarify this. If I'm trading a longer time frame like this, that's usually how I trade it, because I'd be trading this in my longer term account, my swing account, and I don't watch that one that closely. So I would be setting stops. That account's not something where I set a stop here and I walk away and don't look at it again. That's something I'll look at maybe once a day, and I'll move my stop up to make sure that I'm profitable if it does go against me, because I'm not babysitting it, watching every ticker, every candle. So that one, if this was a 5-minute, it might have been different, because I would have been watching every candle. But being that this is, we're looking at daily here, I try not to confuse myself too much between the two accounts. So that when I usually set my stop, I'll move it up. I'll check it maybe 2 or 3 times a day and move my stop accordingly. So actually, I probably would have had my stop right about here at this gap here in the daily. Probably would have set my stop there, so I would have got stopped out here. So either way, that was a winner. CVS was a good trade. Home Depot, we were looking for it to break either direction. And if you take a look here, we broke it to the upside. We did not break the downside. Looks like a home run again, but let's go down and look at the daily and see how this looked on a shorter time frame. So same thing. We triggered right here and we never looked back. So this would have been another one. Same thing. Set your target or set your stop, and just keep trailing your stop up. Once you get fairly safely, and I only had one target set for this. It was 345.69, which was right here. It was a gap fill. So once we triggered, we filled the gap. But it's not, I wouldn't have been selling here. It was only a $2 move. I would have been looking for something, a reversal in a shorter time frame. So I probably would have been looking at the daily time frame. So this one here, I probably would have stayed in until, I probably would have actually, I have a script set to, in fact, I'll pull it up for you. Right here. I probably would have used this one. This will look for it'll close when the price, the current price, is less than the simple moving average, which would be the 9, and the 9 SMA is less than the SMA from 1 bar ago. So what that'll show you is, even though this closed below the 9 SMA, it wouldn't have stopped out here. It wouldn't have stopped out till here because the 9 SMA kept going up until right here. So now we had to close below the 9 SMA with the 9 SMA lower than the previous bar SMA was. So this would have been the stop out here. It's kind of risky because let's say you have this, it doesn't stop out here, and let's say this next candle comes down here, way down here, you're not going to sell till way down here. And actually, what this does, let me dig a little deeper. Because this is a close of the current candle, that doesn't necessarily mean, it doesn't mean the close of the candle. When you set it to close on current candle, that means the current price. So as soon as the price is below the 9 SMA and the 9 SMA starts to lose value, that's when it sells. It doesn't have to wait till the end of the candle, till the candle closes. That's why I wrote it that way. So even if it's kind of a safeguard, so if it's not going to sell here, it's not going to stop out here. Maybe when it gets to here it will, because by then this SMA is starting to curl down. So, but that's probably where I would have stopped out, would have been probably right in here. So, you're looking at 368. You're looking at $25 move for my trigger. I probably would have set this on here and left it alone. I would have watched it and maybe manually moved it, but for this, I don't really see any reason to manually move it unless you just want to move it up to the bottom of the previous candle every candle. And in that case, you would have stopped out right here, which would have been a little bit more profit than what I would have got if I would used that script. But when you do it with a script, you don't have to sit and babysit it. You won't even have to look at it again. It'll just do its thing. And I kind of like that because sometimes between my job and my day trading account, I kind of forget about this account. I don't want to say I forget about this account, but I forget to check things. So I like using that script, and then I won't have to look at it again. And like I said, I like it because it's, in a way, it's kind of a safeguard built in to, it doesn't wait for the close of the candle. This one here, the difference being here is the close from 1 bar ago is less than the simple moving average from 1 bar ago. This one waits for the close of the candle, where this one doesn't wait for it to close. This one's a little bit more risky, but it can potentially keep you in a trade longer. I really don't use this one. I wrote this one first, and then I thought, yeah, that's a little bit more risky. So I moved it to this one. I created this one, and this is the same thing here. This is just for the bearish plays for puts. These two are for the calls. These two are for puts. You can see exit on close, exit on cross. So that's what I use. So Home Depot was definitely a winner. Like I said, it triggered here, continued on up, ran for a while. So Home Depot was a good one. UPS. Let's take a look here. We were looking for a break to the downside, and here's where I was talking about multiple levels. I have it set for the new scan right here. That's what these are. Looking for it to the upside on the monthly. So ignore this stuff up here. Ignore this alert up here. This is for the next video coming up. So we're looking for a break to the downside. It looks like we got it. We just didn't follow through. Didn't get enough push. Look at the quarterly. There's our break to the downside right here. Didn't quite hit target 1. Our entry was 182. The low was 177.13. So you still could have made some money there, but I'm not going to blow smoke and say, yeah, you would have made money on here because it didn't hit the target. Your stop could have potentially been way up here, which means you would have lost money. So UPS was not a good trade. John Deere, this one looks like it hit target one. Low was 320.50. Target one was 321.90. $7 move from entry. So that was definitely a winner. So there you go. That's it for the quarterly. The quarterly looks pretty good. Had some pretty decent setups on there. So and I'll share those scripts, those exit scripts in the description. I'll just paste them in there, and feel free to use them. And thanks for watching this video. I'm going to clean these charts up with all these settings, clean these up, and then I am going to do a little bit more scanning and start on my videos for the coming weeks and months. So again, thanks for watching, everybody. I hope you have a happy new year, and hope 2022 is your best trading year ever, and see you guys in the next video. Thanks. Bye.